And earnings are the next big hurdle for the stock market. The quarter ends in just a couple of weeks, and as Bob Pisani reports from the New York Stock Exchange, there's growing concern over what companies will report, especially on revenue growth.
Now that the Fed has made its decision, for better or worse, it's time to turn to what really matters, corporate earnings. And those earnings need some help, real help. The second half of the year was supposed to see an improvement over the first half's flat earnings growth, but it's not happening. Earnings are expected to be down over 4% compared to the same period last year, and revenues will be down almost 3% as well. Now, a lot of this disappointment is due to energy stocks, where earnings are expected to be down a stunning 65%. I'm not kidding, 65%. Now, besides energy, there's a broader problem. What we need, I've been saying this for over a year, it's not more cost cutting to hit the bottom line. What we need is more revenue growth, top line growth, and we're just not getting it. For the third quarter, the street is pinning a lot of its hopes for earnings and revenue growth on just a few sectors. Consumer discretionary expected to be up about 11%, financials, earnings expected to be up about 8%, healthcare up about 7%. Now, consumer discretionary is in pretty good shape. That's housing and autos. They're doing well. The retailer is a little bit more problematic. However, financials, banks, this is a problem. Now that the Fed is not acting to raise rates, there will be less upward pressure on U.S. interest rates, and that would have been a benefit to banks. That's not going to be there now. This is especially true of regional banks, and that's why a lot of the big names like Synovus and KeyCorp were all down 3 or 4% today and down yesterday as well. Now, we'll get some more insight next week when several big consumer names report earnings. Homebuilder Lennar, for example, as well as AutoZone and Nike. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.